You market traders and profit takers, as promised, we're going to try this new series of dealing with the profit loss trade records that we've had in the weeks as they go by. So this will be our first one. And to keep the time down so that we don't stay too long and wear you out, I know for some of you that's almost impossible because you're hardcore, but um, we're going to just deal with the best pair versus our worst pair. In other words, we're going to take a look at our best trade for the week, the pair that brought us the most pip, and then we're going to look at the pair that brought the least or cost us an expense. So let's move over here. We're going to look over here and see what we've got for the week ending of November the 21st. Look at our totals. It looks like the franc is the best one with 227 pips for the week, and the opposite of that was the euro, which is a little odd, but we'll find out why all of that took place. We lost, or should I say, we took an expense of 123 pips for the week. We had no trades on the euro that brought a profit this week. That doesn't happen very often. At least we get 1 or 2 days usually, right? This week, everything we did with the euro cost. So we're going to take a look at that and we're going to find out why. Let's start with our, let's see, start with our franc. You always like to start with good news first, right? All right, let's look here and see. We are on Monday, okay, and switch back to what we had. We went long and we also went short. We were long at 95.55 and we took a short at 96.24. Well, let's see. Why would we do that? Let's see what the tape was saying. Well, the highs and lows were expanding. Okay, we had movement here, 95.55. The low here end on it was 95.44. And why would we go at 95.55? If you would look across the board, we're looking for that level. There it is, 95.53, which is our GAN, and it was a GAN level at 95.53, so we used that, and the support underneath with 95.44. Well, why were we shorting at 96? What was that? 96.64 or something like 96.24 actually. Okay, 96.24 from that point. We opened up at 95.87 here, and we went as high as 96.53. We were shorting at 96.24. Actually, you know what? As we should probably go back to a chart, but that's okay. We don't really have to do that right now. Well, we're looking at 96.16 as the pivot. I see a 96.24 in previous day there. Sometimes that helps to use those, but we're in consolidation. That's one of the main reasons in this particular instance that we decided to do that. Also, I'm looking at the transitional move that moved from long to short. So there was that issue there. We're also looking at an engulfing candle after a move down. So there were reasons to take short, but at the same time, we looked at the support that was there on the GAN level. We also noticed that we were exhausting in this daily bias column. That's what the Red Sea was all about, and consolidation. So we went both ways and we did okay. Both of the entries hit. The short hurt us a little bit, took away some of the profit that we had from our long. It probably should have moved our way a little higher in the resistance. Um, there was 96.75 and um, even 42 and 48 was there as opposed to 24. Um, Possible just error in looking. Let's move on to the next day with the franc. We moved in and decided to hold the short. Why would we hold a short? Let's take a look and see. Why were we holding that short? Well, for one, we got to get over here. We continue to maintain this red uh, area here. And we're also looking at a long, oh, there it is. There's the reason. Long top with transitional signal still in place. If it's long top, that's usually like a double dare to go short. And because we were already in that short at 96.24 and looking across here, not really seeing a resistance area that stayed within that limit, we just decided to hold it and it paid off. Okay, very good. Were there any squeezes that we saw that was here? 1, 2, 3, 4, 5. Okay, up to this point there was, which would have been, okay, that would not have worked because it canceled itself out the second day. All right. Okay, the third day, which was Wednesday, we decided to start on a long and we took a short at 96.22. So we went long at 95.66 and short at 96.22. It only gave us a single pip of gain. Let's go into that and see where did we go wrong. All right, well, 95, well, we definitely filled the long. And then the short at 96.22 did not fill. And there's the reason why we only got one pip out of the deal from going long at 95.66. And now keep in mind, for those of you who trade with brokers who have fixed spreads, this is, we have a little different work here with our broker. We don't have fixed spreads. We get higher and fluctuating spreads that are based on market demand. And so we we do better on our spreads. Okay, and let's move on to this next move. Oh, the other reason for taking the long is that we've got a Fibonacci number here on the timeline with moves in our dynamic trend channel that were in the red. That was another reason for looking for a move back to the upside, as well as the fact that we're still in consolidation. And we moved into Thursday. On Thursday, we decided, look, we're going to go ahead and go short, but there was no entry. And then finally on Friday, thank goodness, we looked at it and saw that there was a long position to take at 95.79, which was not far away from the open. We got a little aggressive there with our move back to the upside. Why did we feel that way? Well, let's take a look. Over here, 95.80 is our pivot. We're right there on it. So we look good. And the fact that our support in taking our stop somewhere around either the 39 or so was good to take it from that point. We still have the support coming in for the GAN level over here in our signals, going long. Even though we're in a long-term short, we're looking at a move back where bias is starting to get black again. Okay, we have a divergence in the channels here with the RSI. So we took a move. We made a move. We've left out of consolidation, and it worked out for us. Got down as far as 95.62, ended the day at 96.95 for a really nice gain. That was beautiful. All right, now let's take a look at what went wrong. We see here on the euro, we took a long at 124.66. Taking that long at 124.66 did not work very well. Thank goodness for stops, because that market came crashing down. Why in the world did we decide to go long? Let's go in here and see. Well, there was a exhaustion in C. the C column. We had an engulfing candle with a reversal and a tweezer bottom. Hmm, that's a signal telling us we should consider, you know, moving on up, letting it ride forward. But we got just the opposite. So, hey, we had a signal that didn't pan out for us, right? Oh, wait a minute. We had a reversal on an engulf. It was a reversal, meaning yes, reversal. We didn't pay attention to that, did we? We also had the squeeze, and after the squeeze, we squoze up. Then we should go down and then up and down. But this would cancel out because it was another squeeze. So we did not pay attention to our signals like we should have. That's why we lost money on that day. Now let's go to the next day and see. Even the professors made mistakes. We're human beings. As you can see from the profit loss on the euro this week, somehow we just weren't watching what we should have watched. 125.13 short. Okay, we said, okay, well, we'll go short, but we weren't, we didn't pay attention to the squeeze. And you know what? Recalling this, now I remember on the euro, not spending too much time. Oh my, look at this. It's got a first full house. It's short to the bottom. The day after, oh my, yeah, should have been long. Oh, that's not a first full house. It's my mistake. But we do have double trouble here. Short to the bottom should take a move back to the upside. Oh my. Let me see anything else going on there. We've got support on the GAN. We've come. We're in consolidation. We're starting to get some longs signals despite this one pip negative move here, and we didn't we didn't make the move that we should have made. Uh, like I was saying earlier, one of the reasons we did what we did was we didn't pay a lot of attention to the quick view when we were trading the euro this week. Um, Switching over to a 4-hour chart, there was here we go on Monday and meeting the edge here after a false move to the upside there, came back, corrected, and then moved back the next day, however, which would have been okay because that was a Fibonacci retracement on this breakout, right? There it is at 618, teaming up with the GAN level, getting close to it, and moving back to the upside for the following day, Tuesday. And then on Wednesday, kind of a slow, easy move to the upside, but finding the rejection area here as a long term trend line that it met with, and it did not break this high here, even though that, it's long term. If it was on a daily chart, you could probably see better that we never broke the high on that, which would have put us in a position to readjust here. This being our weekly uh, chart, we didn't do a lot of adjusting because we don't use it when that much when we're trading, which maybe we should use that a little bit more. Obviously, from what we're saying here this week, and that is exactly how it went. I mean, on this daily chart, you're looking at this. We spent too much time with the euro looking at this 4 hour and not moving with the flow of things like we should have. Um, hey, we lost the trades because of it. And actually, everything this week was still in a short-term uptrend move until the last day, which was Friday, which took out. Could have made a small profit between this low right here at the end of this long, heavy move down, and then the close of the day. However, once we were out on the euro, it was Friday. You're generally not going to chase anything on a Friday. It's so unpredictable, especially even though it closed below this scan level. It's just not the day to start dealing with that move back to the trend or the downside there. Okay, so that's basically kind of how the week went for our worst and our best trading the forex pairs, the dollar pairs. Um, Still ended the week. Oops. Still ended the week with a 639 pip gain, which is excellent. I mean, if you're trading a full contract, if you got enough money in your account to do that, one contract for all of these trades would have brought in $6,390 roughly. And if you were trading the minis or the micros, even the micros, that's still a good percentage of your account. You're trading a micro account with maybe $500 in it, and you make $63, $64 off of that. That's a good return for $500 account. Think about it. 10% return on 500 is $50, and you're over a 10% earnings in 5 days. Come on, that's beautiful. See, the thing is, you have to change the way you look at money. You know, look at what you've earned. Look at the percentage of your earnings. You're in a $500 account. You're not gonna say, "Oh man, I only made $64." Oh no, 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 no! You made over 12% earning interest on your money. You can't get that anywhere else. Now, can you? Just, oh boy, you keep doing that over a period of time. As we know, one of our goals is a 3 to 5 year period to turn that money into a fortune, and it can be done. It does get done if you have the discipline to just maintain your goals and your direction. So I hope that's encouraging for you. I am your Forex University professor at yourforexuniversity.com, and we'll see you next week.